hope you all see my full screen. Today, the agenda is to go through the PE prices in detail for what happened in the past, the last 3 years, and then focus on the coming 12 months, what may happen, and particularly further ahead with the analysis of the new capacities and see the also recent import-export trends and draw some conclusions. I will also share with you this presentation together with the registration, so you don't need to worry about taking notes or whatever. Who is ChemOrbis? Well, if you join the webinar, you know us, but I would like to stress that in this world of petrochemicals and plastic, where the margins for both converters and sellers are very compressed, it is very, very important to know the latest developments on prices, not to have a high stock when the prices are going down, or not to be without product when the prices are reaching the bottom. So we help you to make the right decisions, and the right decision has to be based on accurate data and timely data. That's what we do. Let's look at the LDPE global prices. The time frame is January 2020 until this month, 2023, May. And you can see the LDPE prices, how they develop globally. You can see Euro price, which is the top hand here in green, then the Turkey, and then the China price. I started with LDPE because LDPE suffered particularly in the last 2-3 years for a shortage, and it became one of the most expensive grades of LDPE. That's the reason why the volatility was also and the increases were also high in territories like Far East. Instead, if you look at the LL prices, same period, same regions, you can see that Europe showed the same increases, very steep increases, reaching record highs, and same volatility. But instead, because the supply situation was much better in China and Asia, you see the level of increases kept the prices increases not so high as in other regions. And the same goes for HDPE, even a smaller volatility. So it has an effect, the oversupply, on both amount of increases or decreases, and also on volatility within the same period. If you look instead at the whole three grades for a region, for example, for China, you can see what I was telling you before, that the LDPE prices suffered the most volatility in the period 2020-2023. And the reason is because I told you before, LDPE was shorter. But look at what's happening now. In the last month, basically, LDPE prices went below HD and LL. And the reason is there is a global slowdown of activity, of demand at a global level, not only in Europe, but in Far East and in other areas. So the uncertainty of the economy, inflation rate, interest rates hikes, and so on, they all influence. And the product that is suffering most is LDPE. And one of the reasons is also because many new capacities that are being installed are mostly based on HD and LL and not on LD. So LD is suffering most. Let's look now at one of the important topics, which is the new global capacities added. In the left chart, you can see the level of new plants starting by year and by size. So in 2024, we'll have nearly 10 million tons added. In 2025, nearly 17. And in total, it's more than 50 for this period. And you can see here to the right the regional split. Nearly half is China-based new plants, then US, and then you have some Russians. If you want to split by grade, then of all those new plants, you can find it here. So as I told you, more than 2/3 is HD and HDLL. very minor investments only on LD. In ChemOrbis, we also monitor the monthly variations because the supply situation is one side together with the demand, which determines the price trends. And for every month, we take the new capacities, divide the nameplate capacity by 365 and multiply by the data. And so you have this impact. And the second half of the year is going to be very tough in terms of extra new capacities. Looking at the monomer, monomer is even much bigger level of investment because just for China, they will add in this period, 2021, 2028, nearly 40 million tons. And you can see tremendous investments there. Half of it is China, and then again, US, Russia. Looking at the import-export trends, I compared the two regions, China and Europe, as used in the 7 group, to show you some trends. From 2010, these are yearly import-exports, blue is imports. You can see that the imports grew steadily over the last year, stabilizing at nearly 5 million. Okay, and at the same time, export decreased. Instead, for China, you can see that the record high was achieved in 2020, and then because of the new capacity startup, basically China needed less imports, so import decreased from nearly 20 to down to 15. So they lost 5 million tons. Those 5 million tons are, of course, finding a new owner in terms of region, because exporters, they export to the regions where they have the best netbacks. Instead, if you want the detail by country, in this example, it's down to not the region, but each singular country. So Europe is made by many states. You can see the PE top 10 importers are in order: China, US, Belgium in the 3rd place, although many of the Belgian capacity is re-exported, Germany, Turkey, and then Singapore, India, Italy, and so on, for a total of about 40 million ton a year. Pardon me. To the right, you can see the top 10 country importers. So the first one is, of course, exporters, pardon me. The first one is, of course, Saudi Arabia, although the amount is decreasing year by year. Then you have the United States growing, gaining market share at a worldwide level because of the cheap shale oil and gas they have. They have a unique cost situation on the C2 chain. So not only PE, but also PVC. 3rd place, Canada, again, part of the same reason, and then EU, Korea, Iran, here, and further on. Now, I want to share with you some ideas on the forecasts ahead of us, how the prices may evolve. In ChemOrbis, we issue report on a monthly basis dedicated to the various polymers and various regions. And before compiling the report, we wait for the publication of the oil and gas energy trends, which is the 2nd week of the month usually. And this is a long-term factor, medium long-term factor. There are other medium long-term factors like the seasonality, the GDP, and furthermore the new capacities. But for the short term, which is 1 to 3 months, many factors come in place, like the situation of supply, demand, the international trends, the currency, the netbacks, and so on, the monomer trends, and so on. And at each time, one of them is more important. And I would say that the one more important nowadays is the global slowdown in economy, which is hitting all the regions. So here I share with you the latest energy forecast, which represents Brent and WTI. Oil, and this is the gas, natural gas, oil fell a lot in April up to 13% based on the recent trends of the economy. Interest rates hikes by the central banks, global slow demand. But still, as you can see, prices, according to the latest forecast, they are growing. And the growth is basically based on a increase in demand, because oil, is the fuel of the economy until now. So the more oil you sell, the more demand for general goods, consumer spending, and so on is better. But let's see how this reflects into our polymer price forecast. You can see here the forecast for Europe for the three main grades. I can tell you that the price is reported here is an average, but it is quite centered. And despite it is an average, it's quite representative. But what is matter more is the monthly change by month by month. So you can see that we forecast for the next 2-3 months until September, basically, until prices will find a stabilization, a sharp decrease again, and then a recovery based on mostly on the cost, because we saw before the cost of the oil should increase after summer, and also because we think that the producers, they are squeezed between low margins and small costs, small prices of their polymers and so on, they will reduce their output. Once reducing the output, they rebalance supply, demand, and prices stabilize, and then if demand will also pick up, we will see prices recovering. And you can also see the trend of the LDPs that I commented before is going below or to the same level of LL. This is the China P raising forecast. Instead, same time frame, May 23 until May 24. We see prices going down for the next 2-3 months, but they stabilize earlier than in Europe. Usually, spot markets move faster than more lower market like Europe, which is more based on contract than spot transactions. So we think that on top of costs increasing, we will see a recovery in the economy, also for the better consumer spending due to the seasonal festivity, the Golden September, Civil October, and so on. Instead, this is for Turkey, the PSM forecast. We see prices going down. You see the same trend for LDPE becoming the least, the cheaper price versus the other grades. And we see earlier stabilization, like we commented for Europe, earlier than Europe, and then a small growth. But compare these prices to the Europe prices. Here you see we are just above the 1,000 level of euros still, probably not going below, depends how serious the recession is. And in China, you see we are well below the $1,000 per ton already. And the same, Turkey is, I mean, in between Europe and China. So conclusions. We have seen that there are major new PE capacities starting up in 2024, 2025, and further ahead, and this will impact. Where are they located? Mostly Asia, China. I didn't comment the effect, but China is also investing in other polymer capacity like polypropylene. And even though we will see less imports by China for PE, for polypropylene, they will even become exporters. We have started to see already some early signs of traders moving products out of China, not to the Southeast Asia region, but also to Europe and other countries nearby. Europe, we have seen the issue. Okay, it's a protected market. We benefit from the imports, but the imports are there as long as the prices are good, as long as the profit is good for those who export. The moment Europe becomes an undersupplied country, it means the prices are not attracted by the exporters. So we will suffer. More volatility. And about regulations, Europe is determined to use more recycled, less virgin grades. Regulations are under discussion in these months. Many producers are already moving ahead with their strategies, finding new processes like chemical recycling, mechanical recycling, integrating. They're making acquisition in the recyclers, big compounders of recycled materials. So things are moving very fast. And in my opinion, this is a strategy for European producers to build sort of barriers. At one stage, we will come at a point where if your virgin product doesn't contain a certified quantity of recycled material belonging to post-consumer recycle, properly certified by the bodies and so on, it will not be possible to be sold in Europe. Now, with this presentation, now I have finished. I will share with you later. I want to show you how we do our job at ChemOrbis using our data to base our extrapolations and analysis. This is a tool called Production News Pro. I will start first with the Global Capacities tab, and I can choose from the Global Capacities, polyethylene, of course, and here you can select only polymer or monomer, or leave all as you wish. Select a market, region, or even the singular country or the singular producer. But let's see what the graph is showing us now. We can see the build-up on new capacities and the total year by year. If I want to see each year contribution, I just untick this, and I can see how year by year the additions are important. So 24 and 25 are the years where the most capacities will come. And here you have the chart of the geography, where the darker is the more capacity added in production capacity. But and below you have the full list of you can see the details, producers, number of plants, and you can see the details of each plant here with the name, production of the grade, either monomer or polymer, the nameplate capacity, location, and when it is starting, if it is already operating or not. But you can do also the other thing. You can do, for example, a search by name of producer. I selected the ExxonMobil, for example, and you can see in this chart here the production capacity of ExxonMobil. Sorry, I didn't. Sorry about it. I should increase the. Okay, it's better right now. So you can see the total production capacity between monomers and polymers. You can see the details of ExxonMobil plants worldwide. So the tool is just to let you understand how capable information and how capable we can see ahead and currently of the supply side. Now, if I move to another tab, for example, supply balance, which is very, very important. PE is selected. Let's select only polymers to exclude the monomer. So we see in this chart, starting January 2021, month by month, what is missing, what is added as new capacities in black, or the plants running lower rates. This is a new trend, the lower rates, because in the past, if you were not running your plant at 85% minimum, you were losing money. Nowadays, the producers are becoming smarter, and they find also smaller low run rates are acceptable, like down to 65, 60%. But the thing is, we can monitor everything. And we can monitor the impact by, this is global, but you can monitor the impact by region or by singular country. Let's do Europe, for example. So you can see each month what is missing for shutdowns, lower rates, and so on. Now let's move to the plant closure. Plant closures means indefinite closure when they shut down everything. And for the moment, the only entry is in Italy, where Versalis shut down their ethylene cracker in near Venice. For new capacities, you have seen already some input in the presentation. but you can select again only polymer or monomer. Let's just do monomer just to show you how fast it is. And you can see this actually I exported for the presentation. You can see each year contribution, those already installed, those will be starting up. The regional split for this is just PE, so you don't have the grade split. But now you see how we know where and when and all the details of the producers that are going to start new plants. So a lot of details. You see here the polymer split. Offline capacities, of course, existing plants reporting issues by maintenance, by force majeures or lower rates. If there is a lower rates and the producer does not tell us how much is reduced the rate, we make an assumption it is 80%. And that 80% or all the variations, just to prevent one of the questions that you may have, how frequently do we update this tool? Well, the tool is updated in real time. As soon as we know something is changing, the plant is restarted or plant is shutting down, it is immediately notified with the news, and it takes immediately effect into this chart. So the situation when you check this chart is really up to date, and we can do it many times during the week. So it's really great tool. And in this chart, you have again the missing tons by either shutdown, maintenance, or lower rates. The 12 months before, 6 months ahead, for what we know, of course. The regional split, again, Asia is very diligent in limiting the supply, and this is the split by grade, right? And below you have all the details. Of course, if you want to limit to your region only, Northeast Asia, for example, you will have this kind of information, and you see how fast it is refreshing the tool, and you can export those also these details for the plants issues. We show always the latest comment available. Now, if you combine new capacities, plant closures, offline capacity, it is this tab you're looking for. It is the summary, and summary is a very powerful tool as well. You can include or exclude the installed capacities. I will exclude it from my example. And you can see again for, let's say, focus only on polymer, the 6 months before, the 6 months ahead, what is impacting on the missing tons between offline and new and balance. And you have the tail of the new capacities here on a monthly basis. You see Northeast Asia is taking the largest, and Asia is taking the largest importance. The lost tons, in some cases, they can be very, very important. And of course, in the 6 months ahead, it's conservative. It will get worse, of course, particularly if we consider that producer will limit their production to rebalance the supply demand. And finally, if you combine those two charts, which is basically this table here, you have this kind of chart. So the missing ton plus the new tons are giving this kind of chart on a monthly basis. But you see in the passive mode and currently the prevailing situation is shortage or supply limitations. This chart to the left is very interesting because it shows you each month. So if you take this figure here and we divide it by the global running capacities, it represents the percentage of the missing tons. So we are about in May missing about 10% of the installed capacities production, and this is instead the impact of the new capacity versus the installed capacities. But if you limit by region, you will see a very different story. For example, grows to 12%, and if you go to Europe, this chart becomes even 15%. I can tell you that when the situation of the missing tons is above 10% of the installed capacities, there is a problem in the market. The problem in the market nowadays is that there is not enough demand. And despite the fact that producers are limiting the supply, still prices are going down. Normally, prices should stabilize or grow when the supply situation is being limited. But with this, I have shown you this Production News Pro and share with you how we do the things, the details we have access to, and that you may also use yourself for your analysis. This information is available for polypropylene, PVC, MPS, and their monomers at global level. Okay. So with this, I finish, and I will open the discussion. We'll stop the registration, please.